Hi, this is Akmir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 27th of January. Starting off with Alien Metals, which looks as though it's coming back to life again. We've had a gap of support of the lows, which is normally a positive. We've broken the resistance line there from October, breaking out of the falling wedge, breaking the 50-day moving average at zero point 0.7. And above the 50-day line, probably looking towards the top of the November gap at 1.03 pence as a near-term target, maybe over the next 2 to 4 weeks, something like that. If worst-case scenario, I suppose we'd head up to the 200-day line or thereabouts and then retreat from there. But it looks a little bit better than that with that gap within the wedge. Moving along to a stock which obviously has had a good week so far. Amor Minerals, and I suppose the real reason for the update today is just to say that I think the retracement that we had from the peak around 4.4 probably better than one would have anticipated. I.e., we could have retreated back towards 2.83 pence, which is probably what I was factoring in. Markets or stocks tend to overshoot on the downside, even in a bullish situation. But this is a nice looking bull flag now that we've got with this range between 3.2 and 4 pence. Obviously an end of day close through 4, and we're looking towards the best case scenario target here, the technical one at least, at 5 pence. That was sort of double, an inside day that we have at the moment. So end of day close above 4 is the trigger to look for there for more on the upside. On to Aminex, which makes periodic appearances here on the Bulletin Board Heroes. We've got a rising trend channel there from March. Looks as though shares are now ready to break outside that channel, so breaking through the 1.05 level. If they do that, we could be treated to a new leg to the upside, possibly towards the 1.3 or 1.4 area, which is a line of resistance from back in August. Time frame on that perhaps as soon as the end of next month. Stop loss back below 0.7. Which was, I suppose, the initial January resistance area, 0.75, in fact, for that stock. On a day when there's not too many situations which are looking ultra hot, it might be worth just reminding ourselves of the Benz Creek position. Here we've got a rising trend channel from back in November, and the top of the channel now heading towards, say, 60 pence by the end of next month. Obviously, we'd like to see an end of day close through the recent peak at 43. But the real technical joy here coming from the way that we had a gap higher back in the middle of the month, unfilled gap to the upside, and support has come in on several occasions above that. Anytime you see support above the top of an unfilled gap, that can be a very strong momentum situation, and obviously, given that the shares have already come up a long way, quite telling that we could actually have further on the upside there for Benz Creek. In terms of the stop loss and end of day close back below the floor of the gap, 34.5 is probably the place at the moment. On to a stock which one shudders in terms of looking at on a technical basis, but it looks as though there's a little bit of positive movement here. We've got a rising divergence line here from November in the RSI window, which tends to be helpful, or can be helpful in indicating a turnaround. Otherwise, a possibility of a broadening triangle rebound over the course of this week, and a move up towards the top of the triangle, maybe by the end of next month, or maybe 4 to 6 weeks, something like that, up to 24 pence. If you're cautious on the shares, I suppose you might wait for a break of the 50-day moving average at 15 pence or RSI 50 plus versus around 44 at the moment. But I suppose that if you like the stock, then this is the place or the area at the bottom of the triangle to take a look at it. On to a company which is not a great frequent appearance. It doesn't make many appearances here, but it looks like we've got a nice setup here with Cambridge Cognition, bear trap below the May support at 106, and then immediately breaking the resistance line there from July at £1.28. Above that, on an end of day close basis, initial target here, the 200-day line at 141, and then hopefully up to the main £1.60 resistance area from back in September. So that looks quite encouraging. Only probably back now below 120, really questioning the recovery idea. On to IDE Group, where we have the shares breaking out, well, rebounding off the floor of the rising trend channel from back in February. That was around the 1.1 pence level. Decent break also of December resistance at 1.46, and I suppose any close above that over the next few sessions could open up the possibility that we will see these shares hitting 2.8 pence at the top of last year's channel, maybe over the next 1 to 2 months. So nice turnaround there for IDE. Onto a stock which has basically served up long periods of misery for its shareholders, as you can see from the chart at the moment of Oxford Biodynamics. Here we've got the possibility, though, a bit like Chill, that we've hit the bottom of a broadening triangle, in this case from June. We also have a bullish divergence line there in the RSI window, which, as you've probably seen from recent Bulletin Board Hero videos, has been quite effective in sort of calling the bottom of a long trending downtrend, if that makes any sense. Initial target here, while above the support line there at 27 pence, is the 50-day moving average at 37 pence, which is maybe not that much, but I think if you're a shareholder, you'd probably be rather relieved to see the shares up at that level over the next couple of weeks, something like that. A stock which I never heard of, or at least never heard of the ticker code, which is quite an achievement considering I pride myself on knowing almost everyone, is Southern Energy. Saw a few people tweeting about this, the Cognoscenti on FinTwit. Here it looks as though we're going to break the initial January resistance at 26.5 pence. And when we do, we have the possibility of the shares heading up to the top of the November price channel at 40 pence. The other point to note is that we had an island reversal, so we gapped down and then gapped up, and the island bottom can be a very strong signal in terms of a change of trend, and it looks as though we've got that now with this sort of V-shaped bull flag bouncing off the 50-day moving average. That's something that's also, that setup has also figured quite strongly in some of the best situations of the recent past, like Global Petroleum. Back to a stock which had a flurry of activity, I think, earlier in the month. Here we've got T42, and the situation here is that it looks as though we are, I suppose we're around one of the resistance lines targets, and we've been trading around that. But if you delve more deeply, you can probably see or say that we're in a rising trend channel from back in November, and that the shares could and should progress within that channel, so above the 21 pence area, the floor of the channel, looking up to 40 pence, maybe by the end of next month. I'm going to finish off with a stock which I think divides opinion, but this is no fun without divided opinion, I suppose. Here we've got Wildcat. The theory here, last time I looked at it, was that we're in a broadening triangle in place since March, and we bounced off the floor of the channel and had a test for support as well. The view at the moment is that at least while we're above the 50-day moving average at 1.9 pence, we could head towards the top of that triangle, or in fact, if you prefer, you could say that we're in a rising trend channel like that, and 1.8, 1.9 support, and then up towards that 6.5 pence area. The other final piece of the jigsaw, possibly that we've got a resistance line there from May, and so you want to see like 2.8, 2.9 pence on a end-of-day close basis, and that would trigger a move back to the best levels or the higher levels. That's it for me today. More updates tomorrow.